Hey, yeah, what? Grab your bootstraps. Yeah, let's scale your growth. Here's the truth, Jack. We'll reach the globe, unveil the notes.
Daniel, what the
Pivot, earn your digits. Won't burn, you'll get it. See, this is factual. Funds will show. Learn to flow with Candid Capital.
This is a Candid Capital interview. In these episodes, we host industry business professionals involved in the global tech ecosystem to discuss various topics related to tech, global economy, and building sustainable businesses and investments. Welcome to the Candid Capital podcast. In this episode, Maxim Galash, CEO of Coinchange Financial, joins to explore stablecoin yield and digital asset infrastructure. The conversation focuses around how yield in digital asset markets actually works, how platforms are embedding these capabilities into financial products, and how institutional participation is evolving. Welcome, Maxim. Great to have you.
Thanks, Josh. Thanks for having me. My pleasure.
So usually how I like to get these started is with the origin story. So, how did your career take you into, tech, entrepreneurship, and digital assets?
Yeah, so it's a pretty long story, but I'll make it short for you. I've been in tech all my life. I went to University of Toronto and did my electrical and computer engineering degree. While at school, I already was working. I worked at 3G Capital for a bit. I worked at the SAP Consulting for a bit. I worked for Professor Garcia at University of Toronto as well for a bit. I had my own business as well. At the same time, it was like an agency business. We built software for clients, mostly applications, mobile apps, web apps, integration. Then we started to do some products on our own. We did have a couple of businesses around the products that didn't work out. So depending on timing, funding, team, different types of mistakes we've done. But eventually we had one good product that we sold. And after that acquisition, I started buying Bitcoin. It was 2017. So while buying the Bitcoin, I experienced that there's a lot of fees and it's a very non-transparent process when I was using CoinSquare back in the day. So, and at the same time, I was using the Wise.com. It's transferwise.com. It's like a remittances platform, cross-border payments platform that was very, very neat, transparent, and fast. So I wanted to build something like that for crypto. And we started building the brokerage. So we targeted the US market. We rolled out the product, I would say, summer 2021. And we added, at that time, it was a DeFi summer. So we added a DeFi yield product as well. So pretty much participation in DeFi markets, DeFi pools, with your liquidity and getting a certain rate of return on that. So it was like a similar to neobank, you can say, but it was a brokerage. So you can fund the account, exchange the crypto, deposit crypto into the yield account. That's how I got in. And been working on that since. So for the last 5 years, I would say 6 years into working, 5 years in the market.
Okay. So what convinced you to kind of go into the solutions in the DeFi space as opposed to, like a fintech pathway or channel?
Yeah, we haven't really, looked at being a traditional fintech in terms of the offering a neobank experience. So building the bank on top of a bank. So building UX on top of a bank was never an option. So again, the experience was buying Bitcoin because I got into Bitcoin in 2017, and the fees were too high, and the fees were all part of the spread, part of the commission, part of the exchange rate. So it was like hidden fees, a lot of that. So I wanted to change the process pretty much. So right at the core was like a crypto exchange, crypto brokerage. And then we added DeFi yield as we had our quants who found out about that new blockchain, pretty much new peer-to-peer marketplace. That's what DeFi is about when you're building smart contracts on top of the blockchain, right? That enables you to do the direct transactions with the other customer that's governed by the blockchain, by the smart contract as a rule engine. So it was an interesting concept. And right now we are pretty much agnostic. We're not doing only DeFi. We also do multi-manager approach on CeFi trading. We have DeFi farming business as well. We have fund of funds business. So we kind of expanded into more like of a traditional asset manager per se, but we started as a DeFi native yield farming platform.
Well, maybe for someone, hearing about Coinchange for the first time, what is it exactly and how does it work?
Yeah, so Coinchange is at its core, it's an asset management as a service. So we service other businesses, our partners. We offer them a curated investment products. So we will curate an investment portfolio based on their risk return profile. And they'll either invest directly from their treasury or they'll be able to integrate our API and white label those products to their end clients. So embedded finance. So we service businesses. We don't really touch retail consumers or any other type of clients. Primarily, it's exchanges, wallets, brokers that either directly invest in our products or resell them through their applications downstream to their clients.
And how is it, I guess, different than some of the other offerings in that layer? In terms of funds and other exchanges or yield providers. Is it mostly just your formula that you've kind of?
No, it's not. No. There are protocols out there, so you can compare. We're not a protocol. You can compare us to Aave or Morpho, right? Those protocols are credit markets primarily. So you can provide liquidity and somebody on the other side is going to borrow it. There are also platforms like Coinbase, Kraken. This is more exchanges. They do have a yield platform, but this is primarily, again, participating in those credit markets. They'll offer a customer a bypass into the Morpho through Kraken app, right? So that's very different to what we do. We are actually a multi-manager asset management platform. So in essence, we can combine different types of portfolios through using external managers, external strategies. And there are some platforms out there like that. Very few target the same client base. Most of them are packaged as a fund, and they'll go and target high net worth clients, accredited clients, institutional clients. We work primarily in the emerging markets, so Argentina, Brazil, Serbia, Poland, you name it. We don't service any clients in the US or Canada right now. We are working towards getting the fully regulated in the US and start offering our products, but we're not. And it's a very different go-to-market for us. We see ourselves more as a technology platform. So our partners integrate, again, our smart contract API. We just use our app directly. So there is no really kind of a fund manager type relationship here. It's more like technology-driven relationship when they can get all the P&L daily. They can see all the statements. They can see allocations. They can choose products. So very similar to investment management platform but tailored towards crypto. We used to say it's Wall Street to Main Street when we were going retail back in the day, because right now we pivoted about 3 years back to B2B, but we started as a retail platform. So think about it as a type of a sophisticated hedge fund type products, but available through very easy interface. And then for B2B clients, those products can be tailored for their redemption frequency, for their asset class, for their risk profiles, for their market that they want to participate. Is it DeFi or CeFi? Because it has different types of risk. So it's very different to Kraken, very different to CoinSquare, different to Coinbase, different to Aave, different to Morpho, different to Revolut. I mean, it's pretty much, there are some similarities, let's say, to other platforms, like to other traditional RIAs. We're not an RIA, but those are very simplistic, right? So they'll give you a spot exposure, they'll give you an index, they'll give you an ETF. And it's more like a passive management while we do active management.
So you mentioned a few emerging markets that you're in. Is it primarily because it's regulatory friendly for what you do? Is that the main reason why you ended up
There's three
starting there?
reasons. There's three reasons. Number one is adoption. So they have a pretty high level of crypto adoption, especially stablecoins. And we do have products on Bitcoin and stablecoin primarily. Number two is regulatory ease of entry. So they have like local licensing registrations like VASP rather than an SEC registration like it is in the US right now, or CFTC. Third is less competition. So there's more competition in the developed markets like US rather than in Brazil.
So are you kind of just waiting for an anchored legislation to pass before you kind of enter the US or other developing markets?
No, we didn't target US for a reason of competition and adoption, right? So there's a lot of competition and the adoption is at a high level, but let's say there's 3 times more assets in the US than in, let's say, Latam. right? On aggregate, as an example, but there's 30 times more competition, right, in the US than Latam. So we did a business choice to do it that way specifically, and it's a stablecoin based yield product that we went to market first. So stablecoin adoption is at a way higher level in the Latam market, let's say, than US market, because we just don't need it. Like we have PayPal, we have banking apps, and we have Zelle and everything. So it's very easy, and e-transfers in Canada. So it's very interactive. It's very easy still to send money and receive, even with the cross border, right? But on that side, it's very hard to get access even to a dollar rather than sending money. So it was a strategic decision. Right now, we're going into the US. Yes, regulatory regime is more clear, and just with the right counsel, it's not really complicated to set up a structure to be able to service accredited investors. I think again, accreditation rules are not thing of the past, but they haven't been reviewed for a while. So I think they should be able to adopt that to more like a recent recent time, because like I mean you can't really disqualify people from participation based on their net asset value, right, of their assets. So it doesn't mean they're silly or don't know how to invest or don't know how to do the due diligence using chat GPT, right? So you have to kind of level the playing field a little bit for everyone. So that's what crypto tried to do initially, by the way, right, with the ICOs in 2017. But yeah, regulatory is getting there. I think the market is there. It's the largest market. We want to be present. So we're working towards the enabling our products in the US market, but for the B2B and accredited clients primarily.
Are you seeing more of that sort of competition from the US kind of running down into LATAM in some of the markets you're in, or are they still not really going outside of their region?
No, I just think I think the big platforms, um, like the big managers like Galaxy and DRW, they're not really interested in the market. I think that let's say Galaxy right now is more interested in AI mining, right? So they have a facility in Texas right now that's been repositioned towards the AI data centers, right? So it's all size game. So for them, it's too small of a market. Sometimes they don't pay a lot of effort into like really curating their products for the clients or analyzing the need. So while there's a definitely opportunity cost for them to do that. So same for Circle as an example, right? I mean, it's a big market for them, but even though designing an incentive plan, how to list USDC on a certain local exchange in Colombia, will be more expensive for them to do that rather because they're going to be planning all that through the bureaucracy, right? And many people will be engaged to design the plan for that specific partner. It'll cost them a lot of money internally, right? And it will never be paid back in terms of the USDC earn or USDC adoption on that exchange. So they're not touching smaller tier 2, tier 3 exchanges or crypto providers, primarily in the Latin market, just for the economic reason.
Are you also in Brazil?
Sorry?
Are you also in Brazil?
Yeah, we work with Brazilian partners as well, Argentinian partners, Chile.
So do you find like with the Brazilian market that, there's kind of maybe, I wouldn't say competition is the word, but, when you talk about stable coins locally there, some of the conversations I've had is like, why, if, I could just use PIX, for example. So it seems like their fintech sector is very developed. Do they even need some of the stuff, do you think, in the crypto market? When you're trying to do cross border, sure. But outside of that, what are your thoughts on that?
Yeah, primarily it's I think preservation, like because their currency is very volatile, right? So people still believe in the dollar way more than we believe it in here, right? So I mean, the dollar has been devaluing and losing its value, but relative to other currencies, it's been doing it less, especially compared to the developing world, right? So there's still a lot of U.S. denominated debt. People still see the U.S. as the strongest economy and the strongest currency, so they want to store their value not in real, but in dollars. They want to store their value in a condo in Miami rather than an asset in Brazil. So it's still so that's more like a store value. So Tether, USDT, dollar is more of a store value rather than the payment instrument there. And as an example, we work with one of the wallet providers, large wallet providers. So you're able to store Bitcoin, Tether Gold, Tether on your wallet, non-custodial wallet, and pay through PIX anywhere you want, right? So you can still use that wallet paying PIX, right? But you store it in the dollar or in a tether gold. And when we were asking about the duration, how frequent their users will be withdrawing the funds, they said 90% just hold it for a year. So you can log the funds for it. Like you can offer the product that will log them for 12 months and accrue higher return than a daily product, as an example, right? Fully redeemable on a daily basis. So that tells you a story if 90% of that type of a wallet users are open to long-term investments, meaning that they use it as a store of value rather than a payment instrument.
Okay, interesting. Um, so, many people at this point have heard the term stablecoins and have a general understanding of what it is. But there's still some that don't fully understand what stablecoin yield is. So maybe if you could kind of give a little bit of color on what that is, where does it come from, and why does it
There's
matter?
there's different types of stablecoin yield per se, right? So there's stablecoin interest, right, based on the lending and credit markets. So you'll be unsecured creditor to a platform that will take your assets and loan, just like a bank loan to other participants of the market and pay you an interest, right? Can be variable, can be fixed. The duration can be day or a month or a year. So there's one market like that. So credit markets, they do provide yield in stablecoins, similar to what banks do. Another participation market is DeFi. So let's say there are protocols that need liquidity. So those protocols will also facilitate some kind of a function, right? Either trading, either lending, either settlement payment. But you'll be on the one side of a transaction providing the liquidity into the pool, into the protocol, and you'll get part of the fees generated of that protocol paid back to you. So you can think about it as a, I don't know, invoice financing or short-term short-term loans as well, right? When you provide your liquidity to a pool, but you are in control of that liquidity, you can pull it back at any time. So your risk is primarily not sending the funds to a counterparty. You still own the funds because it's on the blockchain. You can pull it back at any time, but the counterparty itself that can get hacked, can get pulled, can get rug pulled. So there's still counterparty risk in that sense, but it's different type of yield. So DeFi yield that will be paid to you as part of the portion of the revenue that that counterparty generates. And then the third one is trading. So you can be using a bot on your Binance account, or you can be using a trader or hedge fund, and they will be doing market making or arbitrage. So some kind of a market making on the exchanges, right? So that's also another way to generate returns on your stable coins in today's market. So there's a credit market that generates interest. There's a DeFi market that generates yield as part is pro rata of the revenue of that protocol, and there's trading. So
And why is this yield infrastructure becoming an important layer with the digital asset ecosystem? And I mean that in relation to there's been a lot of, I guess, media on the banks not liking this yield stuff. So maybe you could talk a little bit about that.
yeah, I think listen, there's a few things. I mean, you can one thing the banks do very similar what some of the platforms do, like Kraken and Coinbase, as an example. I'm not really familiar with the mechanics, but the idea is that you are a depositor to a platform that's centralized. They use your deposits to generate returns, and they pay you a portion of that. So banks have been doing that for forever, right? Plus, they're able to do it on a fractional basis, so they can leverage 10 times on your deposit. While, let's say, stablecoin regulation doesn't allow you to have fractional reserves, you have to be one-to-one backed, or the stable coins, at least with some liquid kind of instrument as T-bill or money market has to be behind it. So you take a dollar from a depositor, you put it in a T-bill. You take a dollar from a depositor, you put it in the money market. So on your balance sheet, you have one-to-one equivalent, right, of the deposits that you hold. Bank can leverage up, right, 10 times on every deposit. So it's very different, and in the sense of money creation. But in terms of the mechanics that funds are used to generate profit for a bank or for that centralized counterparty, it's very similar. And I don't think banks are afraid. It's just not clear the regulation. I mean, when those centralized platforms fall into the banking regulation or not, if they start doing that type of a business. I don't think banks are afraid of losing all the deposits. There's too much capital, trillions of dollars that are held by baby boomers and older people that are not really familiar what is a stablecoin. They don't even know that word. When you say circle, they think about the circle, right? They don't think about the company behind USD. right?
Okay.
So it's I think it's exaggerated the fear from the banks, right? It just I think more like regulatory wise, if you're doing what banks do, right? Why you're not a bank? Why you regulated differently? So plus, I think overall on the regulation side, that this administration is doing a good job. I mean, things are moving forward. They're moving slower than anticipated, but they're moving compared to what was done on the last administration, at least in the U.S.
So from your point of view, since you kind of mentioned you think it's a little bit exaggerated, so you think that it's not really a protective play at the moment. It's just trying to figure out what the rules are.
Yeah, I'll
For
tell you that in Brazil, every bank can give you a wallet. Like in
Okay.
Brazil, you can go to a bank, right? Brazilian
Yeah.
bank, any bank, national charter, and they'll open up a wallet for you in the bank. So you'll have your real, you have a wallet, maybe you have a dollar as well. I'm not sure about the dollars, how they give you access to the dollar account. Is it you have to get authorization from a national bank or not? But I know for sure that you can have a crypto wallet with every bank. So in the U.S., eventually it's going to be the same thing. I don't think they're afraid of having stablecoins on their balance sheet. It's just like the regulatory treatment of those stablecoins, how they're accounted for in IRS and in the audits. It's going to take some time to actually tick all the boxes. But I don't think it's like they're defending their turf too much. Maybe some of them. Maybe there's a lot of banks in the U.S. Right, 5,000 credit unions. So I don't know. But in my perspective, I think it's going to be as similar as in Brazil. It's where every bank have a wallet. They can custody for you. They can buy spot for you. Right. I think already in the U.S. I think Fidelity will give you a wallet today. I think I'm not sure, but there are some wealth managers and private banks that already will generate a wallet for you to accept deposits in custody.
Okay. And there's been a lot of discussion around institutional adoption of digital assets. From your perspective, what are institutionals actually looking for to participate? I mean, not all of them are doing this yet, but there's many of the big ones that have been a little bit more forward on it.
Yeah, there's multiple sides, right? One of them is tokenization, as an example. So a lot of exchanges right now, even ICE, right? ICE, by the way, is invested in Poly Market, right? As an example, ICE is a parent exchange of NYC. So they right now recently invested in another stablecoin settlement platform as well. So they've been investing in crypto and like more of an advanced type of trading, like prediction markets. They're also investing in tokenization. So eventually, I think also going to take some time, but all those assets are going to be settled and traded 24/7. So that's one thing of crypto, right? That provides infrastructure for trading and settlement layer and clearance that will be fully automated and available 24/7. I think in terms of the asset managers, most of them have crypto dedicated desks right now, small and large size. They all participate in the market in one way or the other. Some active trading, some spot and index. Everybody know about ETFs, Bitcoin ETFs, right? There's about I don't know 15 ETFs right now from small to large, and there's different issuers and administrators of that. So ETFs are pro, pro, affiliated. I mean, every channel possible in distribution already. So I think what's missing right now is pretty much DeFi access because it's still unregulated and still non-compliant per US rules, I would say. What's missing is active management, so it's still pretty niche. So you can find hedge funds like, let's say, Renaissance, Millennium, right, in traditional world. There's no like Renaissance or Millennium right now in crypto. There are some good hedge funds, but there's market is too small to be well known. So I think eventually the bigger guys are going to start proliferating into the active management as well, more actively and providing it exposure to their client book as well. So DeFi active management is still probably another 3 years to go, I would say. But ET like passive products like staking, like ETFs, like custody, like spot, already pretty well entrenched into the asset management world. Traditional.
So what infrastructure gaps still need to be solved for broader institutional participation?
I think it's a lot around tax treatment is one. let's say in DeFi, a lot of those coins, people don't know how to treat them. Compliance. So like in DeFi, you swap on a pool with a counterparty you don't know. So OFAC, right? Gated private pools. So that's DeFi. I think active asset management is more about risk and manipulation. So there's a lot of those exchanges that get manipulated. So you probably can be reassured that U.S. domicile exchanges are not manipulated, but a lot of volumes are coming from Asia, like Binance, OKX, Bybit, and you don't know, right? So I think they all have to go onshore. They have to all comply. There's a lot of things, and then there's trade surveillance. There's like fairness rules, right? Execution fairness and so forth. So I think that's a problem as well for the active trading side, right? Because if you're buying spot, you can be buying OTC, you can be buying in Coinbase, you can be buying from Tier W, like larger OTC providers, market makers. But if you're participating in active management, primarily it's all Asian exchanges that have this liquidity and the tools. So, and DeFi, yeah, again, it's compliance and regulatory and tax treatment of those assets on your balance sheet.
Well, a lot of the marketing and the media is very focused on the retail participants. I was wanting to know from your point of view, how do institutional expectations differ from the retail market?
So let me repeat your question again. How does the retail and institutional expectations differ?
Yes.
Expectations on what?
Just in terms of what they're anticipating, or not anticipating, but what they require for their digital asset offerings and engagement. So, for example, maybe security is more important to another. Uh,
Yeah. So
like,
I mean, from my perspective, listen, we don't touch retail too much, but we work
yeah,
and talk with the platforms that touch retail. Primarily, it's speculation driven. So a
yeah.
lot of it is so retail will expect a higher return. If we were talking about the active asset management or yield products,
Well, just to clarify the example there, it's just like, for example, with retail, because a lot of people who are in retail have been in the crypto market for a while, so they'll accept higher risk, for example.
yeah, and there's
Uh,
different buckets. I mean, there's
yeah,
degen retail, right? People
yeah.
who do it themselves and they would expect like a high rate of return.
And then, for
Institutional clients are a little different. I think they are more risk averse right now. It's a bear market. Everybody doesn't know what's going to happen tomorrow. It's a very unstable and unpredictable market right now. So everyone wants to go market neutral. They want to be very defensive on their portfolio. They want to have minimum directional exposure, right? So it's in two parallel worlds, pretty much retail and institutional. So retail, whoever is still in the market, I mean, actively, they're looking for better return on their cash. And for some people, it's a full-time job, trying to scout that. But for people who are also, like, let's say that wallet in Brazil, right? So they also want, as an example, in the stablecoin, expectations are 9% return a year, right? With a full year lock. So if you're investing in a product for 12 months, they expect 9% return on that, 9 to 10% return on that capital with a minimum of amount of risk. So it's really hard to achieve that, right? So I mean, institutional side, while we'll be waiting for 6% on the market neutral type of strategy. So on the Bitcoin, the same thing. On the Bitcoin, like institutional clients will expect 2-3% return a year, Bitcoin in the market neutral type portfolio, while retail is going to be looking at 7-8. Right. So the expectations are 3-4x differentiated, right? But the market can provide what market can provide. I think institutional clients are closer to the reality in terms of their expectations rather than retail.
Well, with the institutionals, you don't think maybe their time horizons have changed a bit? Because I mean, if you're looking at it just on we'll call it the Bitcoin cycles, it operates a bit differently than you would in the traditional markets when you're investing. There's I wouldn't say predictability, but something's going to happen every so many years in every cycle.
Yeah, I don't know if something's going to happen. Nobody knows. I think
Oh no, I'm not
institutional.
saying that
Yeah, yeah.
specifically, but
No. The
again,
4 year cycle. People think about the 4 year cycle. Institutional people that are a little bit more aware of that. But again, there's all different theories about how the market can behave. Is it attached to the stock market? Is it detached from the stock market? Is it correlated with gold or it's not correlated with gold? Is it every asset spikes right now? Look at oil spiked. Look at gold, silver spiked, uranium spiked. Like any stock can spike at a certain point of time. Pharma stocks, right? So it's not like it became more speculative. The market itself, the nature of the market became way more speculative than it used to be before COVID. COVID changed a lot of market structure and behavior, and I think it's not only related to crypto cycles, and crypto also might be cyclical, might be not. In crypto, there's always some kind of a token that comes to market. Let's say Hyperliquid recently, a couple of years back, that get great run, right, and still got to maintain that its dominance in the perpetual dexes. So it's hard to predict the time horizon, but it's possible to predict volatility or even calculate volatility. So a lot of institutional they will look at different metrics rather than just the price action.
Okay. What trends are you seeing from fintech platforms or institutions integrating digital asset yield strategies? Is there anything that really kind of stands out to you?
Yeah, I think tokenization is one trend. So everybody's trying to right now integrate products through smart contracts rather than just a direct database integration. So a lot of guys that are deep in kind of tech, crypto, they are looking into the direct smart contract integration. So smart contracts move assets, reconcile, compute balances, to your accounting pretty much. So they'll try to offboard like that back office and mid office function to smart contracts more and more. I think another trend is right now getting into other markets. So as equities become tokenized, bonds become tokenized, credit becomes tokenized, the capital is looking for that yield slash investment into those products. So if you hold USDC, you not only want to allocate it to our pool, you also want to find, let's say, a stock on chain or a portfolio of stocks on chain, right? So that becomes more like a cross market proliferation becomes a thing right now. So tokenization, cross market proliferation, and yeah, obviously stablecoins, they've been kind of around for a while. So that stablecoin multi-chain capabilities when you don't have to swap from one chain to the other kind of also becomes a thing in the apps. So the end customer doesn't have to think about the gas, doesn't have to think about swapping from Avalanche to Solana, from Solana to Ethereum. So a lot of abstractions on cross-chain interoperability. So
Where do you see the biggest infrastructure opportunities emerging over the next year or two? Or is that the interoperability you're talking about?
I think interoperability and cross market, right? So bringing stocks on chain, bringing active portfolio management on chain, bringing indexes on chain, bringing other financial products. So because the spot market pretty much well established, the staking market is well established, the trading markets more or less well established on the venue side. So right now you're starting to look into more of a kind of exotic derivatives markets becoming established, and then you're looking at getting into the adjacent markets, right? So let's say Coinbase, they have prediction markets right now, they have stocks, they have equities, right? So Coinbase is centralized on Base. They have a Base blockchain on Base. There's also people are building those cross-market applications when you can have access to a single vendor, single platform to different markets, like interactive brokers as an example.
How do you see stablecoins and yield strategies evolving into standardized financial products?
I think a lot of that is going to get automated as well into the T-bills deposits. So tokenized T-bills, one way or the other. That's going to be kind of layer one. It's already pretty well established. Layer two is going to be credit markets, like more full, becoming more and more. And layer three is going to be more of an active management when you're going to be finding and balancing across, let's say, credit market, spot, trading, providing the best exposure. So I think it's gonna that space is always evolving. Like the active asset management space, it's always evolving. It's not really becoming a fundamental infrastructure, but it's always you always have to be at the edge of technology, at the edge of the market, have an edge of your own. So
We spoke before, and you had mentioned digital asset money markets, and I was just wondering what your thoughts were on that and where you see that going.
Yeah, so the money market I think is going to be, and it is right now. It's not only going to be money market right now is already coming on chain. I think it will overnight interest markets, money markets will be very similar to what we have in traditional markets, but will be all powered by blockchain. So blockchain means 24/7, means instant settlement, non-revocable. Yeah. So I think that's definitely something that will be, it is a trend right now.
So for someone newly getting into this space, or if you were starting today, where would you try to enter? Are there more underserved areas to target that are not maybe in
Listen,
the
it's
high?
hard to think about every market has its cycles, right? So I think prediction markets are great right now, but it's maybe a little bit already too late. The big boys are building their own. Crypto.com is building their own prediction market. Coinbase partner with Kalshi, Kraken is building their own. CME is building their own. So there's a bunch of big players that are building their own prediction markets. I think the exotic dexes are also a little bit too late, perpetual dexes. It's hard to see what's going to be around the corner. If I knew, I would probably be doing this right now. I don't think it's going to be stablecoin yield or active asset management. This is more of a, again, we're trying to get, we are more like technology driven. So we are getting these products available to retail in emerging markets because of their regulatory posture. And so kind of Wall Street to Main Street, but not in the US. I think, I don't know. It's hard to say what's going to be the next big thing. Hard to say.
Okay.
I think bots AI is pretty kind of getting on the edge right now to be able to create their own wallets, do their own payments, do their own thing on chain. So maybe the AI agents like Claude will be able to have a wallet, have an email, do some payments, receive some payments, do some work, get paid. You know, some agentic stuff with stablecoins on chain might be another big thing. Yeah, something that if you look at maybe 2 years out would be kind of people are writing about.
Has anybody made that work yet? I mean, I've read a lot of marketing stuff on it, but I'm just
I
curious
don't
if
think
you're
anything has been really done. Even on
okay.
tokenization right now, people talk about it a lot, but not much has been really brought on chain yet. So things are moving, but it's really hard to get attention and capital today because of the AI, the data centers, the defense, the energy, the build outs, everything. Like a lot of air is soaked up towards that direction. So crypto tokenization is kind of trailing on the sides, and people have established distribution channels of their products and capital formation. So not a lot of people are looking into, okay, I'm going to go on blockchain to raise my money for that specific product. So I think it's going to take a while, change the behavior.
Yeah, I mean, they've been talking about tokenizing real world assets for a while. I think there's only a few use cases that have come to light. I can't remember them off the top of my head, but I think there's a
But
couple.
stablecoin is the biggest one. So
Yeah.
tokenizing dollar, right?
Oh,
So
yeah, of course. But,
tokenizing gold as well
we
was a
put it
big.
in a new category, right?
Yeah, tokenizing gold. Tether did a gold coin, so
Yeah.
Tether Gold. That's big use case. They're buying a lot of. I think they're like one of the top 20 countries, not countries, but if you put in the country list, they're like in top 20, top 15 holding gold reserves. So
Yeah.
they've been, yeah, so that's been a successful, I think, gold token because they have distribution again. They're listed in every possible exchange in the world. So it's a lot about distribution.
So we're going to move on to kind of the fun questions at the end. That we're coming up to the time box here. So the first question is, what book are you reading? And if you're not a big reader, then what are you listening to? What content are you following that's kind of influencing your work?
Yeah, so I recently subscribed for Colossus. So the founder of Colossus, this is a magazine, but it's a group. They have Invest Like the Best podcast. They also have the Founders podcast as part of the Colossus group. So I listen to those two. I listen also to the Knowledge podcast. The Knowledge podcast, this is, I think, by our fellow Canadian Can't remember his name, but the Knowledge Podcast is really great. I'm reading right now Albert Einstein's biography. Can't remember the author, but it's a German author, translated into English. And that's pretty much it.
And next question is I have to find a reason to talk about AI. So, just kidding. What productivity tool is your favorite right now, or hack that you're using?
I'm not really super versed in AI. I use Gemini. I use ChatGPT on the corporate side. We use ChatGPT, run contracts, run some analysis, run some assumptions. And personally, I use Gemini. It's on my phone, so whatever I need
Yeah.
to search, it knows a lot about me. So I don't have
Again, it
any
doesn't
agents
have to
working.
be. It doesn't have to be AI. I mean, I had a guest who said it was their calendar. So,
Yeah, calendar is good. I mean, my calendar is always filled. Yeah, calendar is good. I like calendar. It's a super app, I could say. Yeah. But Gemini is good and ChatGPT is good. I use those two. We have a guy in the business who is very agentic. I mean, he has agents doing research, agents writing papers, agents doing emails. So he has some good skill set on Claude. Plus, I think he uses the other platforms as well. But I'm not that versed. I have 3 kids. I don't really have much time to play around with that. And
are you
if I
finding
do,
what?
I think by the time that I want, I think the platforms will be there, very user friendly at that point. Right now, it's all early adopters. So
Well, for what he's producing, like, do you find that it's good? I mean, I
no,
like like
no,
looking on social, I can tell you can tell usually what's AI generated and not, like a lot of the stuff.
yes, and even though I think it's a good discussion point. Like something AI generated can help you get everybody's attention to read, but everybody has to read, and then after they read, you have to discuss. So it's a good kind of framework to establish a call, establish a meeting, prepare for the meeting, right? So people are not preparing presentations anymore. They're not thinking about things before the meeting. So when
Mhm.
that person, let's say in our team, he'll prepare using AI, right? He'll prepare the bullet points, he'll prepare the summary, he'll prepare the detailed description and the action plan. But then everybody has to take 10 minutes before the meeting to read it, right? And then everybody has to discuss it, leave the comments, leave the questions, question the output of that, and then have another meeting, right? So I think it's just more like a preparation tool. For now, I don't think I'll just let it do the work. So for now,
So it's not going to execute trades for you yet on
yeah, exactly.
autopilot.
No, there's quite a few AI traders there, like that use AI signals, right? That
Yeah.
try to get the. I again, some of it is very lagging, like we can see by performance. So when the market changes fast, their models don't change fast, while humans can see the market real time. Plus, they can interfere. So if you completely rely on your AI model to trade, it might just go sideways, might hallucinate, right? In the very abnormal markets.
And do you have any health and wellness hacks that you like to use? You're a busy entrepreneur, so I'm sure you got to do something to keep it all together.
Yeah, listen, I'm trying to. So every time I drop off my kid to the school bus, I try to go hit the gym for about 20, 30 minutes every day. So I do some stretching, I do some cardio, I do some weights. I mean, I play soccer once a week. I'm trying even when I'm home to do some small push-ups, 50 push-ups a day, 50 pull-ups. So a day, right? So yeah, try to exercise. I mean, there's a routine that I try to follow. If I don't follow the routine, if I don't have a habit, it just that's it. It's I'm not participating. I have to build in the habit for the first months or two, and then I get into the habit of doing this thing no matter what. So then it helps. I think micro habits, oh, not even micro, any habits, right? You have to control and be able to gradually get into that habit. And then if you benefit from that, if you like it, it becomes self-reinforcing prophecy pretty much, right? Oh, I'm looking better, or I like the gym, or I have to go, or I have my buddies who are going, right? So it kind of gets you going on the wheel.
Now, you mentioned soccer, so you looking forward to World Cup? Have you
Oh yeah, for
secured a
sure.
spot?
Yeah. Yeah. That would be fun.
Um, well, thank you very much for doing the podcast today. I learned a lot, and I'm sure others listening will also learn a lot as well. You can find information about the Candid Capital podcast on the website, LinkedIn, and Twitter. Episodes can be found on Spotify and other podcast platforms. A quick reminder that this is infotainment and is not intended to be professional advice, malicious, or hateful. The views, information, or opinions expressed during the podcast are solely those of the individuals involved and do not represent those of employers, partners, and their subsequent connected private and public associations or organizations.
We canned it, I hope you understand it. Your business growth, we planned it, yeah. This ain't for show, we stamped it, yeah. No FOMO, everyone come join, no solo. This all factual.